Hey everybody, this is Jose Blasco here. We are 30 seconds to go before we start the session today. This is a sound check. If that's okay, give me a quick confirmation on the chat box so I know you hear my voice, and therefore we would be ready to start on time. Just a quick hello, that would be good enough. How are you all? Good to see you, everybody. Thank you so much, Charles. Nice to see all your names here, guys. Very, very nice. Perfect. Very happy to have you guys join me in today's session and looking forward to a good one. We just reached the top of the hour, so I'm just gonna maximize the introduction slide so we can have a proper start of the session, okay? How are you, everybody? Good to see you. I put myself there in the corner so you got more room for the main screen. But let me welcome you to the session today. Today is 11 of February 2020. We're getting together for short-term trading today. So we're going to be looking at intraday market, intraday opportunities in the marketplace. The markets were moving earlier very, very nicely, especially the currencies. I was looking at a lot of movement in the currencies at the moment at which I was checking. So hopefully we're going to find nice volatility swings to take advantage of during the intraday session, okay? But anyway, before we do that, as always, I need to read a disclaimer for you. So I'll do this quickly and that way we can start. So disclaimers. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive when using our products. And this is the disclaimer. This is the introduction. This is TradeStation now, and we are ready to get started. Okay, I got a message here. Let me close the window. Here we go. Okay, good. Very nice. So looking at all of you here connected, very, very good. Perfect. So again, the group is growing, isn't it? And every day we are a few new members in the group. And that means that it's always healthy for me to start the sessions with a quick summary of what we got on the screen, because somehow this is our map, isn't it? This is where we base everything we do. Okay, so we base everything we do from. Okay, so on the left we got futures, in the middle we got Forex majors, on the right we got Forex minors. Okay, and basically moving from left to right, we are looking at trades that are more active. Okay, notice that here we are dealing with climates of 15 minutes, then 60 minutes, and then 4 hours, 240 minutes. Then here in the middle is all 60, okay, and on the right it's all 240. Okay, so you may want to think about it like, if you want to be a short-term trader and very, very active, very, very quick, then you're probably using the markets from the very left. If you want to be more in the relaxed side, still intraday, then you would be looking at the markets on the right side. And if you were to be somewhere in the middle, then you would be looking at somewhere in the middle. Having said that, most of us probably are multi-style trader, and we don't have any problem of having a 15-minute base trade running, for example, with the Euro futures, while in parallel, we may have a 4-hour based trade running with minors or even majors in the middle part of my chart, okay? In the middle part of my screen. So again, in today's session, as I normally do, I'm just gonna go from market to market. Some of you may focus only on the shortest trades of all. Some of you are gonna be focusing maybe on the ones that are based on 240 minutes only. Some of you maybe just like I do myself, mix it all together a little bit, okay? And there is no right, no wrong. The key is that when you apply this in your account, especially if you are using one account only and all your trades go in the same account, you make sure you manage correlations, okay? So for example, it would not be right from a point of view of safety that you are long the Euro US dollar while you are long the pound US dollar while you are long the Aussie US dollar. Because if you were to be long those three trades, well, you are also short three times the dollar. Therefore, you got triple the risk on being wrong on the US dollar, and that would not be reasonable from a risk management point of view. Okay, so I will leave it to you when it comes to managing your correlations. Okay, I will be looking at the trades like all trades I plan. You need them, but certainly you would need to be looking at those trades understanding the other positions you may have in your accounts, and therefore decide if it's time for you to execute or not. Okay. Cool. So let's begin. We're going to be looking at golden colors. So we are looking at golden colors with the word sensible. And then apart from seeing golden and sensible, we also want to see under the column climate, we want to see color. For example, the gray color here, that's not what we're looking for. Okay. So good news here. We got near sensible. We got two opportunities here on the top, near sensible. This is with the crude oil and the euro. And they are both defined, confirmed climates. One is going up, red color, blue color. One is going down, red color. Okay. And there may be other cases. We'll see later. For example, here, US dollar, Canadian dollar, the climate is confirmed, but the climate, let me rephrase that. The alert is good with the near and the word sensible, but the climate is not confirmed with the gray color on the left. So this would be a trade to ignore because it provides less probabilities. If you were to take this trade, it's not a crazy thing to be done, but the probability is less. Therefore, we are looking for colors in the climate column so that way we have confirmed climates. Okay, so I'm going to open the euro and the crude oil workspaces, since it seems that those two markets may be valid to be utilized for a trade. Okay, now with the euro, that one is easy. Okay, we are dealing with the ECH contract. Okay, ECH. That's an easy one because it's like the S&P, it's like the Nasdaq. Those contracts expire every 3 months. H actually represents March, so we're fine. With crude oil, it's a different story. I mean, it's not a different story. It's the same story. It's futures. But at the same time, the reason why I said it's a different story is because in the futures markets, okay, I always recommend to use a website such as bar charts. So you can go ahead and click on energies. Let me close this, energies. Okay, and click on crude oil, because the moment you do that, this would basically help you to confirm if the H is also the right contract month for crude oil. Okay, and energy is a little more complex, and in this case, it's a straightforward one. The one with the greatest values for volume and open interest is indeed the H. But there are times with the commodities where the letter that you see here on the top may not coincide with the greater values here below. So it's always good to redouble check, recheck, and that's why I'm bringing you to this website. I think it's a quick one to use, and certainly if you trade those markets in a regular basis, you don't need to do that every day. I will do it every day in the sessions just so you guys see the process, and that way you can do it yourself. Okay, so we got let me find my mouse. Where is my mouse? Yes, my mouse is here. So here we go. We got the edge here with the crude oil. And if I switch from my crude oil workspace to the euro workspace, okay, so then I also have the edge. Okay, so I got the contracts I need. All of this is clear. All of this is good. So now it's a matter of applying the methodology. Okay, and with the euro, actually, I'm going to be quite quick because we do have a down climate, which is confirmed, like the radar screen was suggesting for us. We are 5 candles into climates that should be of 7. So 5 out of 7 would certainly allow us to trade in the direction of the climate, which is down. But unfortunately, the current value for the average is 109.29, which is the gray line. And notice how the current price is actually 31. So we went on the other side of the EMA, and on top of that, there is no red UFO at this price. The UFOs are much, much higher, and therefore they don't qualify as valid UFOs, because we need those UFOs to be enveloping the EMA. We don't need them to be above the EMA. We need them to be enveloping the EMA. Okay. Therefore, no trade on the euro, at least for now. Okay. So I'll close the workspace and we'll go check on crude oil to see if there is a setup which is valid for us to trade. Okay. Okay. So what do we have here? So crude oil, 3 candles out of 6 in an up climate. We got blue dots, so it's an up climate, 3 out of 6. Certainly it's time to go, but we have a similar setup where notice how crude oil is currently trading at 44, where the average is 47. So same story as before. We are below the average, and there is no green UFO on the screen around 50.47. Another way to say that is we are gonna have a no-go on the crude oil, and we will recheck again later, maybe in a few minutes. Maybe we have a trade, and the red screen will alert us, and we'll come back to check, but not as we speak. Okay. What else do we have? Well, we have a new alert now here on the S&P. So the S&P is giving us a near sensible, okay, near sensible with a confirmed climate. Okay, it's moving up 0.3% up. Powerful market, isn't it? That S&P. So let me load the chart and see what we have. Okay. Very nice, everybody. I'm reading your hellos and good mornings. Very nice to see. So what do we have here with the S&P? Okay, well, with the S&P, notice that we have a little bit of a different piece of information. Okay, we are dealing with candle number 8 in an up climate. Okay, up because it's blue, and that up climate is supposed to be 7 candles. Okay, so we are candle number 8 out of 7. Initially, you would say, okay, I'm done with the trade. I'm not going to take this trade. Okay, because 8 is more than 7. Okay, now as a basic rule, when the number on the right surpasses the number on the left, then you could certainly go ahead and pass on the trade because we started being a little bit late to the party. But at the same time, we know when a climate is very strong, typically it would propagate a little beyond what statistics suggest. So entering now may not be a crazy thing, but at the same time, it is recommended, as we have done before a few times, that whenever you surpass the number of on the left, in this case 8 out of 7, 8 surpasses 7. So it is recommended, if you're going to take a trade, to use half of the position size you would normally utilize. So let's say you would normally risk 1% per trade. Well, if that was going to be a risk, in this case, you will want to go with 0.5% per trade to make sure that you are somehow offsetting the additional risk you are taking by entering on candle number 8, which is a bit late compared to candle number 7. Okay. Now, we are not going to do this forever. We're going to give ourselves a little bit of time, but not so much. So we're going to take that number 7 and divide it by 2, which is 3.5. Okay, and 7 and 3.5 is 10.5. So basically, we are giving ourselves 2 more candles from 8 to 10 for this to continue doing its thing, maybe for 2 more candles. Okay, 2 more candles on the 15-minute time frame, which is the common time frame that we use for climate purposes. Okay. So let's plan on a trade because we may have a trade here. Okay, well, again, I was going to look for the target, but I guess you all know if I look at the monthly time frame. Okay, let me do that again. If I look at the monthly time frame, you will know the S&P is making all-time highs, isn't it? So when looking at the 15-minute time frame, I'm pretty positive that if I turn on AutoUFOs, okay, I'm not going to have any red UFO. We've seen this before, by the way. It's not like it happens every day, but we have certainly seen this before a few times last year, for example, where the market starts making all-time high, and those are the times where it's okay for you to take a trade with no target. So you would have an entry and a stop, and instead of having entry, stop, and target, you would have entry, stop, and when it comes to target, you would just basically trail, stop, trail, stop, trail, stop, following price, attempting to get as far as possible, because the good news is that without red UFOs, there is an unlimited potential for price to go to the infinite. Now, of course, you probably felt what I just said is quite exaggerated, and certainly it is. It's no way price is going to go to the infinite, but at the same time, it's a good starting point when there is nothing to stop price from moving higher. Okay, so this is one of those cases, and we've seen that many times. Okay, when the market is making all-time high, that you can catch a trade and end up trailing stop the whole day, and at the end of the day, before the market closes, because this is intraday, isn't it? Close the trade with a pretty powerful profit. Okay, and we're gonna attempt to catch that one. Okay, so how we're gonna do that? Well, we're gonna define our climate. We already said that we got 2 more candles to go for the climate to be exhausted. Our reference point is the average. Okay, the gray line, which is 3.6291. Let's call it 63. So we are looking at 63 on the screen. 63 here has no UFO. Okay, but 63 there may have that UFO. I'm not fully sure if that UFO is 63 or 62, 75 or something like that. Let me see. 6225. Okay, 6225. It's the top part of that UFO, and therefore that one is what? That one is 6275. 6275 is the upper part of that UFO. And you know what? I'm gonna say it's okay. It's good because notice the current price of this market is, as we speak, when I froze the screen, was 3.64.5. Okay, 3.64.5, which means that for price to come to 3.3, let me say that again. It's not 3.64. It's 3,364.5. Okay. So if the market drops by, let's say, around 2 points to get to the 62.75, what's going to happen is that the EMA is going to drop by a little bit, and 63 minus a little bit, it's going to be our 62.75. Okay. Now, those UFOs on the left, okay, and those UFOs in the middle, they do overlap. Okay, so if you take the bottom part, which is 62.75, let me say that again. Not sure what's happening to me today with calling numbers. Okay, 62.25. Okay, this is, remember, the beginning of that UFO. So when it comes to placing my stop, I'm gonna have my stop to be placed all the way below that particular UFO, which is gonna be 59.75. In other words, the trade will have a risk of 3 points. I'm gonna be entering up here at 62.75 with a stop at 59.25. It's actually 3.5 points. Okay, that's gonna be the risk for the trade. So we're gonna go ahead and evaluate that. Okay. Now I do want to double check all of it now because we just got a candle number 9 that just started trading. You can see here candle number 9. So we just got every 15 minutes we got updates. Okay, so the last update was a minute ago, and notice how the average now went up to 63.5. In other words, if price now comes down, okay, and it gets all the way to 72.75, which was right there on the left, I am not sure we're gonna have a situation where the UFOs are enveloping the EMA. Okay, not sure that's going to be the case. Therefore, I would be keen to consider this other UFO instead, because that one does look like much more accurately located where the EMA is. Okay, notice how the top is 65, the bottom is 63, the EMA is 63.6, so it's somewhere in the middle. Sure, it is that if price goes down, we may have a little bit of a movement to the downside, but I would say that should be enough. And that UFO here that ends up in 64, it's kind of in between this one. And that one here on the left also ends up at 63. So plenty of on-field orders at this price. Okay, so this is going to be the UFO we're going to use for entry since we got an update. So that's going to be the entry price. Okay, and therefore the top is 65. Okay, so we're gonna have 2 points and 1 tick of risk. So 65 is the entry. I'm placing an order now with 2 contracts. Remember to use half of the size you normally use. Okay, so stop is going to be 62.75. So 62.75 is right here. Okay, which means that safety target is going to be 67.25. Okay, and the final target, which is the one I have right here, I'm just going to click on it, and when I click, notice, if I put my mouse on it, the word cancel shows up. If I click, that order is gone. So notice I have 2 contracts at entry, 2 contracts at stop. My safety target with 1, meaning that if price was to come to my entry, bounce, and reach my safety, I would get rid of 1 contract, but I would still keep 1, and I would then ride it as far as possible while I would take now my stop that is located here below, and I would keep trailing stop, attempting to collect the greatest profit I can. Okay, so we have the order in the system. I guess that some of you may be with me on this one. I guess that this opportunity is giving us plenty of time to execute and do the order placement. So I believe that probably some of you are working with me, replicating what I'm doing, And if you're doing that, well done. Of course, make sure you have calculated your right size. Specifically in this trade, we should go with half of the size based on what I said before. And also certainly the decisions about size, including the fact that you could be executing this trade for practice with paper money, all of those decisions, paper money, real money, all of these corresponds to you, because we are all different in the room. Some of you are very experienced, some of you are not, some of you have larger accounts than others, etc., etc., etc. Okay, but the parameters are, one more time: entry 65, 33.65, stop 33.62.75, and the safety target would be 33.67.25. Okay, that's what we've got. And we just need to wait. I love to get filled on this trade. If you've been in the sessions before, I love to get in trades, right before the market opens. Okay, and by the way, everybody pay close attention to what I'm about to say. This is not a good news, but pay close attention. We are going to cancel this trade. I just realized I made a mistake here. 33.62.75 is lining up with a UFO. So we will need our stop to be below the whole thing, which is a humongous risk, which I'm gonna consider not worth it to take. Okay, so I'm just canceling this trade. Guys, didn't notice I was focusing on the middle chart. The stop was in the white space, which is what you want, isn't it? Here is also on the white space. This is what you want. So I was happy with that. I didn't notice. Okay, a little bit of a distraction here on my end, that I was lining up here with the UFO. Okay, so little human error. So quickly cancel all. And sorry for that one, but we'll come back to this later. Maybe later we have an opportunity. Okay, so no S&P, guys. So I'm just gonna close the workspace, go back to my radar screen. Okay, so what else do we have? Natural gas giving us a near sensible, but take a look. The climate is not confirmed, so we will pass on natural gas. And the opportunity we have here on the top with gold, we are dealing now with a hopeful situation, not a sensible, but a hopeful situation. So we are going to pass. Good news, though, is that in 9 minutes from now, the US market will open and we'll got plenty of dates in the climates here. And hopefully we'll have futures opportunity to be executed, but not right now. Okay, so we're going to switch to Forex. Okay, I'm just going to have a sip very quickly, guys. Thank you for that. And we are now moving into the world of spot Forex, and we got 2 trades here to be examined in the 240-minute setup. With the majors first, we got the yen and the Swissy. Those 2 currencies have confirmed climates with both near sensible. Okay, so we have 2 markets to check, which is the yen and the Swissy. And I'm going to start with the yen. Okay, I'll start with the yen so we can look at this properly. Okay, by the way, you may notice that I had made a little bit of a change in the configuration of my desktop just to simplify it a little bit out of feedback I got from you guys. So the bottom with a black background, this is for climate purposes, where the top it's for entry purposes. Okay, so in other words, edge timeframes on the top, and then we have common timeframes in the bottom. And also, vertically speaking, you can see 8 minutes above, 60 minutes below. So this is for active intraday trading. In the middle, 21 minutes and 240 minutes below. So this is for the traders doing swing intraday. Okay, and then here on the right we got daily and 55. So this is kind of like position trading or swing position. Okay, so long-term intraday, a little bit beyond intraday. So we will not be using the one on the right. We'll be focusing on the 2 on the left. But I could understand that some of you may be also using the one on the right. Okay, so right now we're gonna be looking at the US dollar yen. Okay, we said we would look at the 4-hour time frame. Here we go. So what do we have with the 4-hour time frame? So we have a red dot, confirmed climate to the downside, 1 candle out of 5. Certainly a good time to get into a trade, assuming all the other parameters are good. So we are on time. Nice. The value of the EMA is what? Okay, let's look for the value of the EMA. Okay, well, let me do this. I'm just gonna label symbol last value and also the countdown. We're gonna remove that. So the EMA is 109.80, okay, which my friends, 109.80, it's the current price, is right here right now. So the question is, let's turn on auto UFOs. The question is, do we have unfilled orders at this price? And we don't. The unfilled orders are located at 89. Well, actually we do. Yes, I'm not. Oh, yeah, sorry. No, we don't. 89 is not 80. I'm not sure how I looked at this. So the on-field orders are located at 89. The EMA is located at 80. We don't have any UFO overlapping, engulfing that EMA. Okay, we need something like that, and we don't. And therefore, we will be passing on this particular trade. Okay, so disable auto UFOs and go back to the normal scaling here in the bottom chart. Okay, so good. The other one we said is if the yen is no good, then we're gonna look at the Swiss franc. Okay, and remember we are still looking at the 240-minute setup. Okay, and same story. Let's go ahead and look at what we have. So I'm gonna zoom in. When it comes to climate, we have one candle. Okay, so beginning of a climate. This is candle number 1 out of 6. So certainly good time to get a bounce and have these last 6 times 4 hours. Okay, so that may be potentially over one day. That's a good time to enter a market, assuming of course that we have the on-field orders. Okay, so let's take a look at the on-field orders above. Okay, and it doesn't seem we do. So we have on-field orders, but they are located here at 97.66, where you can see clearly the EMA is located around 78, okay, where this is 66, is like 12 pips lower. Okay, so we don't have the proper one. Okay. I'm reading your message, Ruben. Very good. So anyway, so back to the radar screen. Okay, back to the radar screen. On the future end, nothing new. Okay, nothing new right now. We are still 3 minutes and 10 seconds to go before the US Open. So we still have 3 minutes to go ahead and look at a few more Forex opportunities. I believe that after 3 minutes, we'll have movements on the futures markets. We may have opportunities as well. Okay, so let's begin here on the top. Okay, we got two near sensible down climates confirmed with the Swiss yen and the pound Aussie. Okay, so pound Aussie and Swiss yen. It is time, my friends, to switch to minors. Okay, so moving from majors into minors. Okay, and we are looking at the Swiss yen, same configuration, 4 hour time frame combined with the 21. Okay, so what do we have here? So what we have is a confirmed climate, thick dot, red color, 1 out of what could be 7 based on stats. So 1 out of 7 is nice. Is coming up, about to hit the EMA. Okay, I love something like that to happen. Comes into the EMA, falls. Okay, but then continues. Okay, so what's the difference? Okay, here the climate was already exhausted. Okay, and that's why it didn't continue. Where here the climate is not exhausted, it's actually the beginning. So if we're right in this trade, we are likely to catch a continuation of the move instead of a change of the move. Okay, so this is what I'm looking for, and it's looking okay for this to happen. Okay, so I want to disable the last level value and the countdown, so that way I can uncover the value of the EMA, which is 112.30. So keep in your mind 30. 30 is right just a little above where the current price is. So let's see if we have a UFO there. And we don't. Okay, we don't. The UFO that we have available happens to be a bit higher, around 112.42, which is more or less up here, which is certainly higher compared to where the EMA is. Okay, so hey, in this case, it's kind of like we got like copy paste type of setups. Okay, the 3 setups we checked gave us more or less the same result, which is not meeting our rules. Okay, but again, we just keep going. So the pound Aussie dollar, remember the job of a trader is to say no more often than to say yes. Okay, we have the pound Aussie dollar there. Okay, right here. So we're gonna go ahead and look at this one. And when looking at the climate, let's see what we've got. When looking at the climate, we have a confirmed climate, one candle out of five. Okay, so looking good, looking good. EMA 192.83. So we keep in mind the value 83. And now the question is, do we have anything around 83? And around 83, it's more or less here. And unfortunately, we have nothing. The next UFO is up there, which is, higher, is like 90, 95, 96. Uh, so it's kind of interesting to see that basically the four setups that we checked are basically copy paste. Okay, different time frames, different currencies, different cross pairs, different currencies involved. But at this moment in time, we are not meeting any of the rules with those currencies. We're gonna keep looking, and the market just happened, by the way. Okay. Ray, sorry, I was lost. Do we not look at the range time frame in spot anymore? Yes, we could, but I'm just trying to keep it a bit simpler, Ray, because I've got feedback from some of the members in the community that it was a bit too tedious or confusing to also combine the range time frame. So it's certainly not wrong, and it gives you a little bit of an extra visual on what you may find on the edge time frame. Okay. So certainly, Ray, if you're comfortable with that, you can certainly use it. Okay, but in this case, as you can see, I'm focusing now purely on the time frames based on time. I could go ahead and switch to 21 ranges as well. Okay, I could certainly do that and see if we do have UFOs at that price. Okay, and guess what? In this sense, well, actually we don't, because 83 is up here. Okay, and the UFO ends at 82.5. Okay, but this would be how you would address it if you want to do it, with the range time frames. Okay, Ray, that's how you would do it. And you know what, so maybe what I'll do is I'll be doing that. If you guys feel comfortable with me switching back and forth between time frames and range time frames, I'm certainly happy to do it, because it gives you a little bit more of a precise view. But also, again, I'm trying to find a balance with simplicity and efficiency, and also not getting you confused, since these sessions sometimes we run at a pretty high pace. Okay, got it. Thanks for your comment, Ray. Very, very good one, and happy to get your question. So what else do we have? Well, we got crude oil. Okay, crude oil, again, giving us an opportunity. Not sure it's going to be a tradable one, because you remember what happened with crude oil earlier, right? So was it crude oil, or wait a minute, was it crude oil, or was it the S&P? I'm confused now. Like every day looking at so many markets. Yeah, that was the S&P. Crude oil is fine. From a climate point of view. We got 5 candles out of 6. Okay, so we are fine to enter long. But again, we are in the same situation as before. 53 is the current value of the EMA. We are dealing with 54 now. But notice how in none of the time frames there is any green UFO at those price points. Okay. Now, here we go. I was going to say one may just form, and do we have it overlapping? Yes, we do. Okay, my friends, this is an entry. This is an entry. I have to really rush here. I need a target. I don't have a target. Okay, I don't have a target. Oh, wow, there is no target on crude oil anywhere close. Okay, so we're gonna treat it like it's an all-time high, and we are going to go ahead and just trail stop. Okay, great. I've not been fast enough for this trade to be executed, and therefore I miss my entry there. Okay, so look, when something like that happens, okay, the most reasonable action is pass on the trade. Okay, just pass, because price went so deep inside the UFO, especially price went where the inner circle was. That's the key. More than the depth is where the inner circle was. That's the real key. And therefore, that means that all those key unfilled orders got filled. Okay, so the only way I would, again, optionally, okay, I'm not suggesting that you do that. I'm just giving you choices, okay, because that would not be the rules we normally use in the room, isn't it? But if you were to see that your UFO went away just because it took time for you to switch back and forth between charts, so the only way to take the trade would be to now look at the reactive timeframes, and only when a green UFO shows up here, then you will want to take the trade. Okay, but still, I'm just giving you choices for the ones of you that are very, very active and want to be very active. But still, keep in mind that this is going to be way less probability, because the fact that the UFO went away on the edge time frame reduces a lot the probability of the trade. Because remember, the reason why we use reactive time frames here, if you recall, when we discuss reactive time frames, okay, the reason why we use them is so we have evidence of finding on-field orders where we thought on-field orders would be available. But the fact that the UFO went away means that the on-field orders you expected to be available are not. Or maybe they were, but they got filled, so they're not. Okay, so that's, and here we go. You see, when I unfurl the chart, this is what happens. So you don't, it's a much lesser probability trade. And if you are not a very active trader, you don't want to do what I just suggested. Okay, if you were to be a very active trader and you're executing many trades a day, and when you see a setup like that, you still take it and you go for half of the size, half of the risk. It's not a crazy thing to be done, because you still have the climate in your favor, and now not anymore, but you also had the EMA in your favor a minute ago. So if you had a green UFO here, which never happened, then it would not be a crazy thing. But without being a crazy thing, it would always be less probability. Okay, good. What else do we have? Lean Hogs. Okay, so Lean Hogs giving us an opportunity. Okay, so let's go ahead and turn on the Lean Hogs chart. And this one is, I believe, here in the session altogether, it's been a long time we didn't trade Lean Hogs. Probably my chart is not properly adjusted now with the right symbol. So let's take a look at barcharts.com to look at MITS. Okay, we're looking at MITS Lean Hogs. Okay, so we can see what is the right symbol. It seems the right symbol it's going to be the J, and it does look like the J is the correct one because the greatest figures are found here with the J. Okay, so let's go ahead and load LH J20. Look at that. We didn't trade Lean Hogs since last year in 2019, isn't it? Of course, because we are dealing with a 4-hour time frame for the Lean Hogs, given the fact that it's a less liquid market compared to the S&P, the Euro futures, etc. So what happens? We have many less opportunities, and since we only get together, the amount of time that we spend in the get-together rooms, so long story short, we haven't been trading this market since the last year. So what do we have? Well, we have a climate defined as a down climate. It's 1 out of 7, so perfect time to enter. Average 64.85. So 64.85, guess what? We have it right here. Okay, so this UFO certainly qualifies as an entry. With the top is 27, so that is fine. 27. Let me see what's the bottom of that UFO. That UFO has the bottom of 32.5, so it's not overlapping that one. Okay, so they are not overlapping. And that one, it's also ending is 27. Okay, so we're fine. And the only thing I want to look is this one has the bottom at 57.5, where this one has the bottom at 57.5 as well. Okay, so 57.5 is going to be our entry. Okay, and we are so close that we're going to have to move here, looking for the right location for the target in this case. Okay, we are already entering a green UFO. You guys see that? So remember, the moment you enter a green UFO, the way to approach the trades is to shoot for the next UFO, but we don't have anything close by. So what we're going to do then, I'm going to recommend you to use the inner circle in this case, because we are doing intraday trades. If this was a swing, then I would load a lower UFO and go for that. But since we're going to be in and out during the day only, I want to be realistic with my targets, and therefore I'm going to use 63.25. It's going to be the target for the Lean Hogs trade. Okay, so I just made a note for myself. Okay, and now that I know where my target would be, okay, I'm just going to go back to my edge time frames there and place an order using 57.5. Okay, 57.5. This is what I'm going to be using, which is right here. So I'm going to click sell 2 contracts. Make sure you calculate the right size for yourself. Okay, and we're gonna have the stop located at 30, right there, okay, 30, and the final target is going to be all the way 63.25, much lower right here, and then the safety target. Oh, we just got filled. Here we go. Perfect. So we are in the lean Hogs trade, so it's gonna be 290. So let me bring down to 290 my safety target. Okay, that's it. We're in the trade. Okay, we're in the trade, my friends. We got filled on the lean Hogs, and we have a little bit of an initial movement in our favor, which is nice to see. I will not expect it to drop like a rock because we still got green on the left side, isn't it? So price should be, experiencing a little bit of a fight up and down until it finally pushes to the downside all the way. Okay. Now notice as well the point value of lean Hogs. Okay, we are talking about a $580 race trade, also because we are dealing with larger time frames in this case. Okay, 4-hour time frame climate, so everything is larger and bigger. So this is a trade that could take the whole day, and depending on the size of your account, this is a trade that could be reasonable for you based on risk management on your risk management rules, or this could be a trade that is not valid for you because it exceeds your risk parameters. And if that's the case, it's fine. Let's go for another trade, and that's it. Okay, so I'll come back to this one. Okay, in the meantime, I also want to make one last comment here. Okay, we just shorted here. Okay, this is the 23-minute time frame. Okay, so time stop apply, and now if after 3 candles, 21 minutes each, we are not out. Okay, then you would want to cancel the trade. I mean, when I say we are not out, I mean we didn't reach a safety target. So then you would want to cancel the trade and get out, ideally for a small profit or something like that. But you would basically assume that given all the rationale around this trade, lean hog should have failed more and faster. And if it's not, then you're at risk of a reversal, and then you will want to get out. Okay, so that's a time stop, and you would use 3 candles, 3 to 5 candles, depending on your rules, using the 21-minute time from here on the upper left. Okay, but in the meantime, we will let this trade to do its thing. We are in right now. Okay, good. So what else? More futures. Okay, well, when it comes to futures, we got nothing else here on the top. No more golden alerts. Okay, the only one is here with the lean hogs. So we got that one in. So then let's go ahead and go back to the world of Forex and see if other opportunities are available. So when it comes to the majors, we are still dealing with the yen. Notice how the Canadian dollar showed up. Okay, but also notice how the Canadian dollar has a non-confirmed climate, and therefore we are not gonna utilize that one for the trades. Okay, and the yen we already checked, so we're gonna pass. Therefore, the trades to be analyzed and planned are more trades using the majors. Okay, and to be honest, when I say more trades, I mean one more, because that one on the top with the golden alert, that's the Swiss franc yen. We already checked. The second one in the list is the pound, Aussie dollar. We also checked. The next ones with the word sensible are those 3. Okay, but notice how those 2 in the bottom have a non-confirmed climate. So in other words, I'm only left with one, at least for now, which is the Canadian dollar Swiss franc. This is the only one that would make sense for us to analyze and execute. Okay, so we're gonna go ahead and take a look at the Canadian dollar Swiss franc. Okay, Canadian dollar Swiss franc. Here we go. So while it's loading, I'm gonna check your comments here. Yeah, Bojan, I see your comment about it was the ES, Bojan. I'm not sure exactly if this is following something I said or something that someone has said here in the room that I missed. Okay, so if any, if it was a message from me, Bojan, make sure you elaborate just a little more so I can follow you, and I'm happy to check the ES or anything else that you guys need. Okay, but anyway, so we're looking at the 4-hour time from here. Oh, got it. Got it. Got it. Okay, so now I totally follow your vision. Thank you for that. So, Canadian dollar, Swiss franc. Okay, we are dealing here with a confirmed climate. We got four candles into the climate. It's an up climate, and these up climates on that currency, they are supposed to last for eight candles. So certainly, we are in the middle of the climate. This is a healthy time to enter. Just like this candle came to the average bounce, came to the average bounce. So we may be able to catch another one of those and keep riding it for another four candles, 4 hours each. That's almost a full one-day trade. Okay, so certainly an opportunity is available, at least on paper. We need to go deeper to see if, apart from on paper, this opportunity is actually actionable. So 73.5, okay, that's the value of the EMA. So I'm gonna turn on AutoUFO to see where the on-field orders are, and the on-field orders happen to be located at 73.45. Okay, so that is a little bit below the average, and unfortunately we're not going to be able to make it work. Okay, we are not going to be able to make it work because we are trading at 0.7354. So from 54 to 50, which is the EMA, we only have 4 pips. So if this currency drops by 4 pips and gets to 50, the EMA may have dropped, let's say, to 49, and 49 is still only here far away from 45. So we don't have a situation where those UFOs are enveloping the EMA. What a day. So it seems that all the Forex setups are not meeting our rules properly. Okay. So what do we do in cases like that? Okay. Well, it's very simple. You sit in your hands. Okay. You sit in your hands and you act professionally. Okay. Or you add more time frames to your trading style, and then you can execute more trades. Okay, but certainly not make up a trade when the rules are not met properly. Okay, so you either sit in your hand or you open the door for other time frames to be utilized. Okay, now I would like to also go back to the link hogs and make a few comments here. Okay, so you can see, as I was expecting, that those UFOs are hitting link hogs and are pushing prices up. Now, you may have said, you may have thought, Jose, if you knew that, if you saw that, why is it that instead of entering the trade when you did, you didn't wait to enter the trade a little higher? And the answer to that question, if you were to be thinking about it, and I would love it if you are thinking about it, the answer to that question is because the buy on field orders are a high probability thing. But since the climate is down, we know that in the down climate, on field orders tend to be canceled. So even though the on-field orders are here, we could have seen the price keep going, and never come back. It could have been, okay, in a normal situation. In other words, in an up climate, it would be really unlikely. But in a down climate, it could happen. Okay, what I was expecting there is more of a little bit of a fight, which is what's happening. So that green UFO is sending price to meet the red UFO, and that red UFO is likely going to bring it down. And if that's the case, we'll be happy. But in the meantime, we need to be ready as traders to absorb this, wiggling up and down with our emotions under control, without getting, anxious or nervous or anything like that. Okay, and that's why I'm explaining what's happening behind the scenes. So when you see that happen and you do it on your own, you are not like, oh my God, what do I do now? Should I close the trade? No, it's part of the trade, it's part of the plan, and in this case, it's actually not a surprise given that UFO on the left. Okay. Anyway, so back to futures. Nasdaq, here we go. We got an opportunity with the Nasdaq. We got an update on climates 3 minutes ago. It seems that Nasdaq is pushing down. And also, natural gas is now giving us a confirmed climate near sensible. So we have two more opportunities that just showed up. Thank you very much, market. We are very happy when you give us opportunities. So I'm loading the Nasdaq. And I will also load the natural gas. Okay, natural gas. Okay. So when it comes to natural gas, of course, you are reading my mind, isn't it? When it comes to natural gas, we are going to be looking at bar chart. We're going to be clicking on energies and natural gas to confirm the expiration month H is what it shows on the top. In the bottom part, the one with the greatest liquidity is also the H. Okay, so everything is confirmed today. It's nice and confirmed. So we're gonna switch NGH20. So that would be natural gas. And while this market is loading, we'll move to the Nasdaq and see what we have here. Okay. We have a potential opportunity, but no trade. Okay, that's what we have. Okay, let me explain why I said that very quickly. So first, climate is confirmed. Thick dot, red color, one candle into a down climate, which is supposed to last by 4 candles. Okay, so this is a good time for us to short, and for us to short, we should be shorting around 95, 69, 75. Okay, but what's the problem? We got no UFO, no red UFO at that price, no red UFO at that price, no red UFO at that price. The UFOs are way higher, and therefore we have no trade as we speak. Now, especially here, when you look at the share bar and the tick chart, any moment in time, you may have something like that happen, and then a UFO shows up that was not there before, and now guess what? Now you have a trade. And this could take any time because those time frames, shares and ticks, are not depending on time. If you expect this to happen on the right, it's going to take at least 6 minutes. Okay, because I'm saying 6 because you would expect at least 3 candles to form a UFO. So 3 times 2, that's 6 minutes. But here in the middle and the right, it could happen anytime. So, even though we just had a UFO form, unfortunately is, more in the 70 area. Well, actually, let me check the bottom part. I don't think that one is valid, but let me check. The bottom part is 70. Well, you know what? Yes, it's valid. That one is valid. Is enveloping the EMA. Here we go. Talking about things happen quickly. So let's go ahead and load AutoUFO so we can look for a target. And our target here, wow, plenty of room. Our target here for the Nasdaq would be 28.5. Okay, so 95, 28.5. That would be the target for the Nasdaq. Okay, so let me see if I'm on time this time to enter my trade. The UFO is gone, guys. Okay, so we have the same situation as before. Again, for the very aggressive guys, you did have a UFO show up, so you can execute out of that UFO. But again, that's a reactive time frame, so you are a little bit of overdoing it. We talked about it earlier. That's gonna remove a lot of your probabilities. Okay, so I'd rather wait. Okay, I'd rather wait for more evidence. Let those green UFOs to go away. Okay, let price to fill the orders, come back up, give us another UFO. Okay, and then you take the trade there. Okay, and we need to watch for that because while I was looking for the target, basically those orders got filled. Okay, so what do we have with natural gas? Okay, with natural gas, we have a new climate that just confirmed to the upside. And unfortunately, I'm just going to conclude this trade very, very quickly. 1 out of 4, that's very good. We want to enter this trade, and the price to enter is 1767, which is the current price, exactly this price. What's the issue? No green UFO. The nearer green UFO is much below. So we don't have at all with natural gas any situation where we have an overlap, where we have that enveloping setup that we look for. Okay, so not a trade to be executed with the natural gas with the Nasdaq. If I had been fast enough, would be out of risk because this trade would have reached already safety target. So entry went down to safety target. So you'd be out of risk on this trade, which would be very nice to have, because now if this climate from 1 to 4 propagates, so next thing you know, that's going to be a 1-hour trade moving down. That could be a powerful one, but I cannot do it unless a new UFO forms here. So we're going to be watching this back and forth before the session ends. Okay, the one with natural gas, I'm just going to close it because that one is a pretty sure thing. We're not going to have this setup. Okay. Quick look at lean hogs. What's happening with lean hogs? Okay, still the fight going on. Okay, well, good news. Okay, good news. That UFO is gone. Okay, we still got a little bit of UFO here. Okay, but that UFO is gone. Okay, so the climate is doing its job. Remember, in a down climate, buy on-field orders will tend to be removed. Okay, all of this is good. The downside is that with the fight, that UFO went away. Okay, so all the sell-on field orders were used to kill the green UFOs. So now basically we are now relying on the climate more than anything else. And the good news, and that's one of the reasons why we use EMS as well, is because the EMA may inject, okay, an additional pile of on-field orders to sell at 64.90 something. If this market was to rally back up from 80 to 90, we're going to have a new set of on-field orders potentially kicking in, adding a new UFO in the marketplace, a UFO that does not show up yet, but may show up later on. Again, this is the normal thing, guys. And this trade is, up to this moment in time, this trade is doing the normal thing trades do when we enter a market, especially when you enter a market based on a 4-hour time frame setup. Okay, so this is much less active compared to what you could have done with the Nasdaq, which was entry, safety, target, and then keep going. And that's been a matter of 10 minutes. With the 4-hour time frame trades, everything is more of a slow pace. Okay, cool. So back to climates. What else do we have? So we have the lean hogs, we're in. Natural gas, we said not today. The Nasdaq, we are watching. The other two are hopeful, so we will pass. In the currencies, we got again the Swiss franc and the yen introduce themselves. Here we go. New setup with the yen. Okay, with the yen, we have a setup on the 60-minute time frame, which we didn't have earlier. Now we do. Okay, which, by the way, notice that we also have it on the futures market, just showed up. Okay, so yen futures and yen spot, we have an opportunity there that we need to go ahead and assess. Okay, so anything on the Nasdaq? No. Okay, so let's go ahead and open the yen futures. Okay, and while this is loading, I will also go ahead and turn on my majors and go for the yen. Okay, and in this case, I'm not going to be using the middle charts. I am going to be looking at the 60-minute time frame and the 8-minute time frame. Okay, those are the markets that I'm going to be looking at in this particular case. Okay, so what do we have with the yen? We're here on the spot Forex. We have 3 confirmed. Actually, the last dot is confirmed. It's 3 candles into climates of 5. Okay, so we still may have room for these to come to the average and fall for 2 more candles. So that's a 1 hour plus 1 hour candle, 1 hour per candle. So that's a 2-hour plus trade. Okay, so looking good. The average is 83. Okay, 83 is the average. So now the question is, on the 8-minute time frame, do we have sell-on field orders at 83? And with the spot Forex, we don't. Okay, we have 87. We don't have 83. Okay, now having said that, this is 84. Well, yeah, it's not going to be enough. Okay, yeah, the average will go a little higher when price comes up, but probably we will not have that UFO to envelop the EMA value, which is currently 109.83. So yeah, spot Forex today is being basically a collection of not today's. Okay, so let's see what's happening with the yen futures. Okay, we have the Japanese yen, JYH20. Okay, that's what we have. We are dealing with an up climate. Remember, the yen futures is the contrary of the yen spot. Okay, so when the future goes up, the spot goes down because it has the US dollar on the quote where the spot got the US dollar on the base. Okay, so it's basically inverted. So that's why this one is blue. Three candles out of 5. So again, we are shooting for a 2-hour trade, and here we got the EMA being 91.20, which certainly falls within that UFO. Okay, that ends at 18.5, that ends at ND5. Guess what? We have an entry and we are entering the UFO as we speak. So this is a trade, my friends. I need to find my target. Okay, so where is my target? Here we go. So my target is going to be up there and up there with the yen futures. Yen futures. Okay, so yen futures is gonna be 88.5. Okay, so 0.9188. 0.9188. That will be the location for the target. Okay, so let's place an order. The top of this UFO price just came out. We're still on time. 20 to 5. Okay, so 20 to 5 is the entry right there. Stop is gonna be 18. So safety target would be 27, and the final target is 91.88, much further out. Which again, we talked about this many times in the sessions. When you do intraday trading and your final target is so far out, probably what will end up happening is that you will end up trailing stop, following price, and probably not reach that final target and exit somewhere in the middle. Okay, so this is what we have as we speak. We just need this market to drop by 2 ticks and we'll be in the trade. We are 2 ticks away from the entry here. So I guess that this time you guys, all of you, had time to place an order either with paper money or real capital. But this time we did have time. When it comes to the Nasdaq, still fighting. A new UFO just showed up here on the left. But that one is really wide, so we cannot use that one for entry, even though it does line up with the average, but we cannot use it for entry. Okay, so yeah, if you're in the trade, I missed it myself, but if you're in the trade, probably most of you missed it because you guys are using me as a reference, and I missed it, so you probably did too. But for the ones of you more experienced, if you are in the trade, you are out of risk, and basically you are waiting for the climate to propagate. So it's waiting time right now. When it comes to the yen, we just got filled. Okay, so we're in. And when it comes to the lean hogs, yeah, you can see there is a little bit of selling pressure kicking in. We are back to break even in this trade, which is nice. The climate is doing its job. We just need those green UFOs to be out of the screen, which again, it's a 4-hour time frame setup. Everything happens more slowly. So be patient if you trade those time frames. But for now, the trade is looking normal, is looking the way it should. So all good. Okay. So Nasdaq, I'm just gonna conclude that we forget about it. Okay. And by the way, if you've been in this trade, basically you are in and out for break even in this trade, isn't it? And with the yen, so we are in the trade and we are now hitting the meat of those on-field orders to buy. And again, another trade that is doing the normal thing, and buying pressure should kick in at any moment in time, given the climate, the EMA, the UFO, and we should see the yen move in our favor. Okay, and if not, we have the stop in place. This is trading. Okay, cool. So I'm gonna check if there is any question on your end. Bojan, you missed the yen trade. Got it. You're still on time to take it, Bojan. The UFO is still on the screen. And if you want to be a bit more careful, you can use the reactive timeframes. But in this case, it's fine to use the reactive timeframes because the UFO is still on the screen in the middle chart. Okay, where the prior cases, the UFO was gone, and that would imply additional risk. But at this moment in time, it would not be crazy if you see a green UFO show up on the reactive timeframes, which this has not happened yet. Then you could certainly still go for it as a manual entry. Okay. Rubin, the pound US dollar was not showing up on our climate screen, therefore it means that the pound is 1.53 ATRs from entry, and with a 4-hour time frame, 1 full ATR from entry. So you would need to wait like 4 hours to get an entry if the pound was to move at the normal speed at which the pound normally moves. In other words, we can certainly plan a trade on it, but you will have to watch it because probably at the time of the entry, the plan would be rectified. That's why I rather use this radar screen with the alerts. So not only it saves me time, but also it saves me time when I plan trades, but it also saves me time when it comes to my review process. Okay. Here we go. So lean hogs now started moving back into the profit territory. Nice to see. And again, we are now waiting for a red UFO to form. And if that's the case, you will want to trail the stop. Also, remember, we are now in candle number two candles on the 21-minute time frame. So we still got until the end of this candle, which is this is 9:12 plus 21. That would be 9:33 Chicago time, which is 10:33 New York time. So if by 10:33 New York time you didn't reach the safety target, then time stop applies and you will want to close this trade manually. Okay. Anyway, I think that we are all good. Everything has been covered for today. Not too many forex trades today. It's been more in the future side. Hey, that's what the market gave us today, so we'll grab it happily. And you guys keep up the good work. I will see you tomorrow. Tomorrow we'll be doing long term with the options, okay? And I will see you again tomorrow. And if you guys have any question or anything, make sure to shoot an email to reach@tradewithufos.com. And of course, we'll be very, very happy to take a look at your trades. By the way, a new UFO just formed at 64.90. So what you will want to do now is grab your stop, okay, and move it right on top of 64.90, which is 64.90 to 25 right there. So now notice that we just reduced the risk of the trade from 580 to 280. Now, if you get stopped out, you would lose way, way, way less in this trade. This trade is now looking even much better than before. It was okay earlier. Now it's even better. Okay. Anyway, you guys take care. See you tomorrow, everybody. Bye-bye.